as a base to look for setups, opportunities, where we can scalp the market for, well, at this point, maybe about 3 or 4 points, and likewise, the same amount of stops. The market here is opening up a little bit down here to the downside. It's kind of maybe a small correction, but we're still, we're off of the 48 handle, but we're coming down here to a 46 handle. So a little bit of a correction as we come down here and retest that overnight low here. Coming down here to the 30. Again, just keep your stops in place. And we'll see what happens. There are the levels again printed for you in the chat box. And we will add to them, subtract from them, use them as a guide for the day. And they are there for us to kind of give us opportunities to scalp the market. Like I said, for about 3 or 4 points these days with the kind of, well, the volatility that's out there, right? Because of the where we're opening up, and then also we're going down to the downside, which creates more volatility than we usually would get. Going up, it just doesn't seem to create as much volatility on the upside as on the downside. So be careful and be cautious. Trade smaller because of the quickness of the market with the volatility, and be patient and wait for opportunities. You put all of that together and it gives you opportunities to scalp the market. We're also looking for price action opportunities as well. So the combination of the levels that we give out plus price action opportunities gives us trading opportunities to trade. We focus more in the morning hours, and we're also looking at 4 to 5 trades on average. Obviously, when things are moving around a little bit faster, you can expect more trades, and when things are a little bit slower and more contained, lesser trades. But on average, I would have to say probably about 4 to 5 different trades during the course of the day. All right, the market continues to slowly drip down here a little bit, coming down here to our 23 area. Again, it did bounce off of the blue band there if you were a little aggressive right off the opening. And coming back, gotta retest this, maybe come down here to the 23 area. Again, if anybody has any questions, please feel free to ask in the chat box. And if you look at the chat box, you'll find the levels that we're going to give out today, that we gave out already, and we're going to use those as a guide, and we can tweak them. We can adjust them a little bit. We can add to them, subtract from them. All depends on volatility, and all depends on what the day brings and price action. So nothing's etched in stone, as you can imagine. All right. Markets here opening up a little bit weak. Continues to downtick here. Support level, next support level we have down here at the 23 area as we are swiftly coming down here. Again, we are scalping the market, looking for opportunities for ebbs and flows. So we keep our stops in place. That way you are not going to get hurt by any one trade or any one bad opportunity that might occur. Or if you get markets that are trending one way and won't bounce, at least initially. And they always have a bounce. It just depends when it's going to create that opportunity for us. That's what we're looking for, but that's why we also have our stops in place. All right, trying to work this 23 area here. See what it wants to do. Again, make sure your stops are in place. We're not going to love any trade we put on, that's for sure. All right, seeing what we can talk about here as well. Obviously, we're testing this 23 area here. Again, make sure you keep your stops in place no matter how you trade. Doesn't really matter. Just make sure your stops are in there. So that way we don't get hurt out of any one trade. And basically, I think you're going to probably have to have your orders in place so that you don't get caught up in any, they just give you 1 second sometimes to get in or get out of a trade. As we continue to downtick, we always get this morning rush here, right? That's created by the first couple bars. We talk about that all the time. That's what's happening here. And the first couple bars are a little bit more volatile as the players come into play and they start trading, and they are, trading off of last night, off of the weekend, whatever they think might be happening or might not be, getting positions on. So the first couple bars is definitely a little bit more volatile. Sometimes it goes our way, and so right now it's not. But you got to keep your stops in place, like I said. And continues to downtick here, and we'll look at the next support level we have is down at 08. So. If anybody has any questions, feel free to ask in the chat box. Our trading, anyway, obviously have to trade the volatility or be concerned about the volatility that's in the market. There is the volatility that occurs right off the morning, which usually happens all the time. And that's, again, like I said, because you get the weekend, you get people reacting to over weekend news, whatever happens over the weekend. And you get some more volatility sometimes early on, and then things slow down a little bit, but at least we know. Well, we did buy our 23 here. That was our support, and we got stopped out. So our next support level we have is down at 18. Our resistance area would probably be around the 35, which is our pivot right now. So I don't let people know when I have a trade because everybody trades differently. Everybody scales in differently. So just because I'm putting on a trade doesn't mean that you have to put down a trade. Some people like to wait for the first couple bars in the morning to kind of get by and then put on something after that because there's more volatility in those trades. My job here is to let you understand the risk involved in the trades, and you have to make those decisions on your own. Not trying to cop out or nothing. I'm just saying that's what I do here. So I did buy the 23 area and I got stopped out. So that's that's the trade that I put on. And now I'm looking for our next support level is down at 08, and the upside resistance right now is 35 area for me. All right, so now we're just kind of hanging here. Again, the first couple bars off of when we opened up a lot lower creates a little bit of more volatility. And now we're just kind of floating down here on the low, see what it wants to do. We put together a methodology that allows you to make those decisions on your own. You have to understand the risk involved. That's what I'm here to explain. And once you understand the risk, then the responsibility of the trades is on you. Only because my philosophy here is that we are trying to create independent traders, right? You make decisions on your own, and as long as you understand the risk involved and trade that risk according to your risk tolerance. All right, market seems to be based out there a little bit down at the 17 area. Come back up there. Again, if you got stopped out, that's okay. And we'll see what happens on the next opportunity. Just be patient and wait. And that way we don't get caught up in the ebbs and flows of the volatility here, because like I said earlier, the volatility to the downside creates a lot more movement, and you have to be very patient and wait for those opportunities to create themselves instead of going out there and trying to make up a trade because you are you're seeing the market move around and you feel like you should get in. That's probably the worst reason that you should trade. That's not a reason to trade, right? So patience is important. Waiting for opportunities, support levels. Then you have price action opportunities. Combination of both gives us uh, areas to trade. All right, let's see here what's going on as far as any numbers are concerned. There is wholesale inventories coming out here at 9 o'clock. Then we have a couple Fed speak, well, one Fed speak at 11 o'clock. And again, the Fed speak on Friday created a little bit of a push to the downside in the afternoon, and then they kind of consolidated there a little bit. And but now we're opening up here, and the market again. We are trading off of the unemployment number on Friday. So let's see. The Great Resignation, according to a new survey by Resume Builders, roughly one quarter of the 1,250 employed American adults declared their intention of finding a new job in 2022, setting the stage for yet another year of turmoil in the labor market. Market here again comes here, does the lows. The next support level we have is down at the 08 area. Right, and turnover will be the highest among workers in retail, food and hospitality, education, office, and administrative support. And, 1 in 2 workers are seeking better pay and benefits. 52% of the job seekers anticipate quitting in the first half of 22, and 26% plan to quit by March. Oh, that's interesting. Workers often make shifts in employment after the new year, said career strategist. Employees may wait for the end of the year bonuses to make a change or see what new opportunities arise in the new year. Plus, as the pandemic continues, people continue to evaluate their lives, and work is a large part of that. All right, next support level we have is down here at the 08 area. The market continues to be a little bit weak here. Again, we had resistance up at the 35, but didn't rotate that high, so we're just kind of flat right now. What we have is down at 08. We have a little number coming out here in about 15 minutes. See what that is going to do to the market, as the market here stays a little bit weakish. And next support level we have is down at the 08, continues its little sell-off after the market opened up. Resistance would be around the 35 area still. According to the latest JOLT survey, there are now almost 11 million jobs across the United States, a near record high. Job openings, a number of workers voluntarily quitting their jobs also surpassed 4.5 million in November, which was even above the prior record of 4.4 reached in September, driven by better pay, more flexibility, and remote work. As the market continues to downtick here, looking for the support level down here at the 08 area. Again, the backdrop of the unemployment number, like I said, they did open weak on Friday after the number came out, and they rallied it. So, some other players did, absorbing the number, probably saying, hey, it's not that good. Who knows? Also, again, we are having all these things that it was talked about in the Fed, with them doing what they were supposed to be doing and raising rates and um, cutting back on their buybacks and lowering their balance sheet. All that stuff was negative for the market. It was all out at the beginning of December, right? December, when they had their last meeting, but the market never reacted to it. It kind of stayed strong, made new highs, right? You had new highs as of last week, so they just once the number came out, they confirmed. Then they had the minutes on Wednesday. They confirmed. Job numbers wasn't that great. They confirmed. It's just a delayed reaction to it. I think what should have happened a while ago. That's all. They should have had this correction a while ago. I don't know what was keeping the market up. Don't ask me. I didn't understand it then. Didn't understand it now. Bond market also, rates are going up. I mean, what was supposed to happen a while ago is finally happening now. That's all. So it's not like it's a big surprise. We're still at a 46 handle, right? I mean, we're pushing that, right? But still, 48 is a high, so it's not like we're tanking. 48 is the handle's all-time high, so it's not like we're tanking. We're just going down. I mean, like I said, for all those reasons I said earlier. So we got down here to 9.25. Again, depending on how you scale in, if you're scaling in 1.5, 2 points above and below a level, maybe you got in. I don't know. Some of you did do that. Some of you didn't. As the market continues to downtick here, we're in the same bar, so the 8 is still okay. Maybe you adjust a little bit to the downside on your scaling if you are a little bit more risk averse. But whatever situation is, do something that you're comfortable with. Create a little smaller if you don't like the volatility, and make adjustments to the market as you see fit. And you have to make those determinations on your own based on each individual's risk tolerance. As we come down here to the 08 area now. Again, if you didn't get filled, maybe you make an adjustment to the low end of the range. Just make a little adjustments to keep you in the game a little bit and make you understand, as long as you understand what the risk is, and trade it accordingly. And if you got in a little bit lower, maybe you got in at you're in at 6 or something like that, depending on how you're scaling in, or not, or you're just going to wait till the market settles down a little bit, right? As we're still in that same bar, we do get the volatility, that's for sure. The one thing about this market is that, especially to the downside, you get the quick movements here. Sometimes it's relentless, right at this moment, right now. So you have to make the decision. You want to wait a little bit, wait till things settle down, and that's a possibility. Also, not everybody has to trade the same way. All right, so we're just testing this 8 area here. See what it wants to do, and make sure you keep your stops in place. Maybe you got a better entry point because of the price action prior to that. If you didn't get filled at when it went down to 9.25 initially, so maybe you're still in at a better price. Testing our level here, and those are little light suggestions that you can make as based on the price action. Not everything's etched in stone, like I said. Everybody, you have to make adjustments based on what the market is telling us, or not sometimes. Right. So hopefully we're able to get in a little bit better entry point there, and a nice rotation there off of the 8 area. Again, we suggested making a better entry point for us. That way it kept you in the game, and also to make your style get stopped, and there was a reason for it. Any adjustments to any of the levels are based on the price action, and you have to have a reason for it. And that's what we try to do here, is give you reasons to trade and reasons not to trade. reasons to make adjustments, and there's a logical reason why we made that adjustment here to the downside on against the 08 area. Hopefully you were able to take advantage of that and stay in the game there a little bit. Hopefully you did. At least made it down to 7. I think that was the least you could have done. If not, got done at 6. Like I thought that maybe we could get in at 6. So hopefully you made that little adjustment, kept you in the game. It did pop all the way up to almost 11 here. So hopefully you were able to. Now we're getting the 11 and more. So if you have extra contracts, you're just scaling out of them. Again, this is a trade that makes up for the other trade that we put on, the 23. We talked about exiting that because the market wasn't giving us any opportunity there. And we adjusted our, you're very demanding this morning, the mark. Below the 08, we've got 46 even, then 89, then 81, 72, 65. I think the sun is getting to you. Too much sun there in California. All right, those are the new levels that we added on here to the downside. Again, we don't know which way the markets are going when we start trading. Just trading the markets at what they give us, and consequently we put those levels out, and then if the market rotates one way or the other, we make adjustments. All right, so nice rotation there against our 08 area. Again, depending on how you made a little bit of an adjustment based on the price action. Hopefully you did make the adjustment like I suggested when we got down to 9. And then that way you had a nice rotation there and got at least 4 or 5 points on that trade. And again, if you have multiple contracts, you're able to exit, keep some, see if we can take more than 4 or 5 points and have a trailing stop. Probably be out by everything right now in case you did have any, or if you're going to stay with it and keep the stop a little below the 5.5 here. I don't know, it depends on what you do. I'm just giving you different ideas depending on your risk tolerance. Market got down to 4 and change there. Got all the way down to 4.5 and kind of retest this little area here. Again, next level on the downside we have is down at even. And below that we got, as you can see there on in the chat box, we got 89, 81, so on and so forth, 72 and 65. All right, market here, complete sell-off mode. I mean, hard to get short anywhere, and that's the other thing. The only place we could have got short was off of the morning against our blue band area there. If you were a little aggressive, just as the market opened up. As we continue to downtick here, looking for our next support levels down at the even area. Right. We have a number coming out here, small number compared to all the extra stuff. Following the winter's holidays, employees were supposed to return to work the first week of 22. Instead, many called in sick with a wave of Omicron and the flu knocking out 3% of the U.S. workforce. The situation is being compounded by severe labor shortages hitting the country, leading a series of economic disruptions that are most pronounced in essential healthcare and education industries. That's for sure. That is for sure, for sure. Now we're coming down here again to the even area, 46 even area. Again, just keep your stops in place no matter how you do it, and see what opportunity the market might give us, or not. Right? I mean, there's no guarantees here. All right. Trying to see if we can get down to the even area. Again, if your volatility is too great, then just make adjustments on your entry points, and trade a little bit smaller. That way you can handle the extra volatility as far as the stops are concerned, and that way it doesn't, the extra volatility you should use that volatility for you on your side instead of negative. We got down here to 0.75. Hopefully you guys got in at the one area. Again, you're scaling in, right? That scale should have happened there, only because we talked about, only because of the volatility. You're not scaling in a half a point above and below, that's for sure. You got a quick 3-point rotation there if you did scale. If you're not, if you put it there at even and you didn't get filled, then you have to adjust a little bit. All right, so we got a nice rotation there to the 4 off of the 01. And again, if you didn't get the even, just make a little bit of an adjustment there. Again, this is futures trading. We are trading mini S&Ps here, looking for opportunities to scalp the market based on the levels that we gave out, and also price action opportunities. Right now, there's no price action. It's just one-way trade. And again, it's kind of hard to just say, oh, I'm just going to jump in here and get short because the market's going one way. We just never know that it's going to continue to do that. We are looking for opportunities to get short, but those opportunities, the market has to at least give us some semblance of a trade there. And right now, the resistance would be up at around the 30 area as we're coming down here to the even. There's some buying down there, and there isn't. All right, hopefully if you adjust it a little bit down here to the downside, and see what it wants to do. All right, nice rotation there. Hopefully we're able to adjust a little bit like we suggested and get a nice rotation there. Whoa, we are just quickly jumping around here. Somebody's really, again, you have to put your orders in place to be able to take advantage of those rotations. Unfortunately, they are whipping around here very, very fast. So we had suggested a little different entry point there against even if you did jump in there, we did a nice little pop back up. Next support level we have is down at 89. So that even this area should hold a little, but I'm not gonna keep my stop in place either way. If you didn't, hopefully you took some profit, then this is on any extras that you have on, right? Hopefully you have some extra contracts on, and then you're maybe trying to see if we can, but I'll keep your stop in place on anything that you got left over. And then we'll look for 89 and below. But a very, very, that little pop there from 0.45 down was very intense. I mean, there's some good size being thrown around right now. Like I said, this should hold, but I'm not gonna love anything here. But I can imagine that this area should hold a little bit now, but still have my stop in place on anything I got left over. So only on extra contracts with that you're going to hold on here too. If not, just keep your stop in place, and that way you're not going to lose any money on the trade. That's for sure. Well, hopefully you're not going to lose any money on the trade. You don't want to have a good trade on it and lose money on it because you put your stop in the wrong place. Now we're trying to bounce here off of this. If not, we're going to look at the next support level we have is down at the 89 area. Again, we're looking to take advantage of ebbs and flows of the market. We kind of ran through the 23. The 08 worked for us very nicely. We made a little bit of an adjustment. The even area here also worked for us very nicely. So even though we got run over on one of our levels there, we stayed focused and kept trading our other opportunities that the market gave us. And No, we did all right, and it's still kind of weak though. The support level we have is down at the 89 area. Again, you just have to be patient and wait for opportunities. Obviously, when there's added volatility, you're going to get more opportunities, but just be patient and wait for them to present themselves in the market. We are still weakish here. Trading options, okay. And options are a little different than futures markets, obviously. It's a different kind of ball game. It's a different kind of different concepts that you're trading. Holding and stuff a little bit longer. You're finding, depending on what you believe the market might be doing. You might even be hedging, right? So options are a little different than futures. Futures where we are looking to get in and out of trades versus the options where you get a position and kind of just milking it a little bit, or maybe even I don't know, sucking up some premium in there. Who knows? Who knows how options have so many different ways of trading. So, all right. So we traded off of the even area here now, and now we're going to look for the next support level we have is down at 89. So hiring, employment is a problem, right? At least still a problem, as we talked about that here. The 7-day average of U.S. daily cases has surpassed 500,000 in the first time since the pandemic began in March of 2020, despite an increase in public testing. Many are also testing positive at home, and some are avoiding tests altogether, meaning that the infection figure could be a whole lot higher. More than 5 million Americans could even be stuck at home isolating over the coming days, which could deal a significant hit to the economy over the next month or two, said an economist. So again, not only are we dealing with the Fed doing what they're doing, you're also having a little bit of a fallout from Omicron, right? And how that's affecting the economy. And again, that's another reason why I think the market, you're throwing all these like negatives into the market at this point, creating this little push to the downside as we continue to downtick here, looking at the 89 area, next support area that we have. I thought the market was very resilient on Friday after a pretty bad unemployment number, that the market kind of up to the upside and finished on the upside. So this is to make it up for it. Hiring temporary is not an option. So that's another reason. Again, we're talking about reasons why the market might be selling off here a little bit. Again, really doesn't matter. All we're trying to trade is the volatility and what the market opportunities might give us. And sometimes it gives us more, like we're very busy today, but other times doesn't move as much and creates lesser opportunities. But today we are busy. Gotta stay focused and take the opportunities when they present themselves. Margin that is at all-time highs in stocks or for the options market. Yeah, well, it depends, right? I mean, I would think that a lot of people, if they're trading stocks, have a lot of gains, right? Because of the way the markets have been very, very powerful to the upside lately. So basically, I think you're eroding some profits here more than, I would venture to say that if you're buying stocks, if you're trading the stock market, you should have been having great couple years. Even though you have to deal with the push to the downside here, and we've had a couple pushes to the downside. So I don't think it hurts. I mean, you see what happened here over the last week. We had one push the week before. That was, we consolidated there on the opening the last week of this December, consolidated on the highs. And then here last week, blew out after selling off on, so we come higher to the 91. We're looking at 89. And then you consolidated after the FOMC meeting until today. And now we're having another push to the downside. So we're going to find a little area here. We'll consolidate. And then the market has to decide which way it wants to go. We're going to continue to push to the downside or not. We got down to 891 instead of we were looking at 89. And again, depending on what your scale is, how you scaled in, maybe you put it in there. I don't know. Again, not everybody scales the same way. So all right, nice rotation there. We had 89, and unfortunately, it just got down to 91. Yeah, that bailed you out there, Don, huh? Got bailed out there. All right. Resistance right now would be around the 24 area. Some are saying that the recent tech sell-off may be an opportunity to buy the dip, but other trend watchers are more skeptical. The Nasdaq fell 4.5% last week for its biggest weekly slump since February of 2021 and ended at 3 percentage points away from a correction territory. The pressure comes as the Treasury yields continue to rise ahead of key inflation reports this week, including the CPI number and the PPI number, which are going to be released, I think, this week. Nasdaq is down thanks to another 2% this morning. It started last night too. So, Kathy Wood's ARK Innovations ETF just launched a 52-week low of $84 level, which it's not witnessed since September of 2020. Moreover, ETFs are down over 10% in 2022, falling precipitously in the first week of trading. Wood's highly leveraged disruptive innovation strategy are proving risky if she doesn't diversify in other sectors, and she is even doubled down on her forecast, predicting that ARK would now deliver a 5-year compounded annual growth rate of up to 40%. Okay. Okay. Kathy Wood remains firmly in the Grinch camp. The outflows are starting to show, said some guy who is a manager of some thing. According to calculations from the Financial Services Network, StoneX companies insiders sold $13.5 billion of stocks owned by ARK and bought just $11 million in the 6 months in December. Well, there you have it. Sounds like it there, Peter. The spike in insider sales and the lack of buying interest is worrying, noted a strategist. The medium ARK holding has lost 55% since the 52-week high. If insiders are not buying now, why would the investors? Said another strategist. So she's having a little bit of trouble there. The Federal Reserve most recent dot plot, which signals the central bank's outlook for the path of interest rates, currently shows a median forecast for 3 hikes in 2022. Though several market participants are expecting more. Goldman Sachs is out with fresh research note indicating that the Fed will raise rates 4 times this year, given rapid progress in the U.S. labor market and the hawkish signals that signal a faster normalization. The forecast comes after last week's release of the FOMC minutes, which laid out a triple play for policy tightening, rate hikes, tapering, and the balance sheet's runoff. And Goldman is also predicting an expedited runoff process, which would begin in July, if not earlier. The move would see the Fed shrinking its nearly $9 trillion balance sheet by allowing holdings of its Treasury and mortgage and MBSs to mature. Okay, well, that makes sense, but they're going to make money on all of it. Fed officials have cautioned that they remain dependent and could communicate their intentions clearly to the public, but many are flagging the central bank's transitory forecast that never came to fruition. Yeah, well, that was the case. All right, so market popped up to 023 area and coming back down here. Be careful there at we have 89. Careful there on the 89, maybe just a little bit. If we make a new low, I don't know. With inflation probably still far above the target at that point, we no longer, as we continue to downtick here, again, make a little bit of an adjustment here against the 89, like I said. Come in there a little bit lower than that based on the price action. And we're coming down here and testing this 89 area. Maybe you're in there at 87 or so. Again, below that, we got, well, that nothing down till 81. So market here continues to just stay a little bit weak. And if you're trading, if we adjusted a little bit, maybe you're in at 87, gave you a chance here to scratch it if you don't like the price action. Yeah, again, like I said, just kind of hanging around the 87 area now. And there was a reason why you could have made that adjustment. We suggested it early on before I got there. Again, we are here trading the price action, plus also you have to adjust to the market and what it's doing, and hopefully you can do that. And like I said, if you don't like the price action, give you a little bit of a profit, or you could have scratched some. Everybody trades just a little bit differently here. So that all depends on how, maybe lessen the load, trade a little less, get out of some. Yeah, everybody makes adjustments according to what they're doing. If you're everybody, there's different options. That's all I'm saying. Nobody here trades the same way. That's all I'm trying to say. As we continue to downtick here, coming down to the 81 area. Did we get the levels? Did you see the levels? Well, if you look at the chat box, we'll see the levels that we have out there. There they are. All right, so trying to give us a little bit of a rotation here. Again, if maybe you got in there at 83 against the 81, and if you didn't, again, make a little bit of an adjustment. Again, you have to watch the price action here and react to it, right? This is what is going on in the market. Now coming down here to the 81 a little bit. Testing this 81 level here now. Okay, I mean, we did get down to 82, so hopefully maybe we were able to scale in there. Should have got filled there at 82 easily. Again, you're scaling in against an area, right? I mean, we're not going to, 81's not, you can't, with the volatility that's out there, we're not going to get 81 exactly all the time. So unfortunately, we have to make a little bit of an adjustment based on, the volatility. Hopefully it did get in there at 82 against the 81, and we had a nice rotation there against it. Obviously, we didn't get all our contracts. Obviously, if you had 80, if you scaled in below that, but had a nice rotation there against the 82 against our 81. So market here continues to stay a little bit weak. Very big move here off the morning, off the opening. We got, I don't know, a 50-point S&P move to the downside. Not bad in the first almost hour here. So be careful there. If you didn't get 81, I would be very cautious about trading the 81 level, only because we got down to 82. I would be looking more at our next support level. We have down at the 72 area as our next support level. So again, you have to make adjustments to the market and what the market is telling you. So if you didn't get 81, if you're going to enter anything, you got to do it below. So again, anybody who's trading, you have to make those adjustments based on what the market is telling you. Next support level, we have good support level. We have is down at the 72 area. If you do, and if you are using the 81, you're obviously not getting 81. You're probably doing a little bit below that. If you didn't get filled, like I said, though, because we got the 82 and rotated up, basically the 81 got triggered already, especially with this volatility, and becomes a lot more riskier. All right. Still got a nice little bounce there if you didn't exit those trades. Again, everybody trades differently. All right. With inflation probably still far above the target at this point, we no longer think that the started runoff will be substituted for a quarterly rate hike. Said some analysts at Goldman, we continue to see hikes in March, June, September, and how now added and have now added a hike next December. Even with 4 hikes, our path for the funds rate is only modestly above market pricing for 2022. So Goldman is on tap for another rate hike in 22. As the market's prices in this lift off of U.S. interest rates, yields have been ripping higher. The 10-year yield has climbed over a quarter point since the beginning of the year, soaring 30 basis points to 181 since January 1st. The real yields, which are inflation adjusted, have also risen at a pace not seen since the height of the pandemic fears in March of 2020. So there are the adjustments based. I mean, like I said, everybody knew this was happening. It just took the market that much longer to adjust to it. Bond market though today, not reacting whatsoever to all of this stuff. They said, you know what, we're just going to sit and watch today. All right, so we bounced the got right down to 81 and had a nice rotation off of it. Hopefully you were able to get in either 82, maybe you got in it before that, had a nice rotation off of that to go retest the 81 and then got right back up. So the 81 held very, very nicely there for us. Yeah, and if anybody has any questions, please feel free to ask in the chat box area. I have that window up and can answer any questions that you have. Hopefully I've kind of held your hand through some of these adjustments that we've had to make in the market, because based on the price action, like I said earlier, not everything is perfect here. You have to make adjustments, tweak them a little bit. That's part of the game. All right. So we've had to work through, again, we average about 4 or 5 trades today. Obviously today it's definitely on the high side of that total, as you can imagine. So that is what happens here. You just never know when you're going to get opportunities to trade. We just never know when markets are going to open up and start giving us opportunities to trade. Are all the opportunities going to be good? I don't think so. But if you stay focused and wait for the opportunities there, they got triggered, and we were able to make a little bit of money and made adjustments based on the price action to help you stay in the game a little bit. resistance, excuse me, resistance right now would be around the 05 area, and the next support would be down at the 72 area. All right, right now we've got resistance around the 05 area. Next support level is down at 72. Things have settled down just a little bit, obviously. I mean, don't expect them to keep jumping around like they have, but still a little bit volatile, one way or the other. But maybe the down pusher to the downside settle down here a little. We'll see. But that doesn't mean it will. But like I said earlier, you have to be patient and wait for the opportunities to present themselves and then take advantage of what they have. And hopefully that's what we've tried to do here this morning. Now we're getting a little bit of a bounce here. Could have been if you were a little aggressive, a little buy there above the 90 area, but only if you were very aggressive based on the price action. Again, there's different opportunities. We need reasons to trade. Reasons are based on technical analysis that we're looking at. And the reasons are based, like I said, on the work that we do. And we kind of give you reasons to trade, give you reasons why you should enter a trade and why you shouldn't, and where your risk should be, and where your sometimes you look at the exit strategy to give you help as to where you should enter some trades. We try really hard to keep opinions out of each individual trade. It's not good to have an opinion. Seems to get us in trouble more than anything else. Again, we had resistance around the 05 area, got up to 94 and change. Again, the 80 next support level we have down is down at 72. I don't. Some of my traders do have a 1 minute chart up sometimes. So I just it would be over trading at that point to say that we're going to have a 1 minute chart to get. We try to keep the cost of doing business at a minimal amount, and so if you start looking at a 2 minute or 3 minute or even a 1 minute, you're going to be trading a lot. And again, if the cost of doing business is not a factor for you, then you could probably use those other opportunities, and then you'd be scalping them for less than than what we're trying to do here. So there's different objectives for different charts, and but we try to keep that at a minimum instead of over trading. The tendency, if to use those other charts, would be to over trade, because there's so many different opportunities that occur based on the fact that the charts are 1 minute and 2 minutes or even 3 minutes. All right, Philip, you're welcome. Have a good day. Again, so now be careful as we rotate it back down here to the lows. Be very aggressive there if you're going to touch the 81, trade that. Otherwise, look for the 72 on the downside. We're going to come down here and retest the lows here, so be careful. If you are going to trade it, just keep the stop pretty tight there. I mean, 2 points is not the way it's trading today, not the worst little call there. But again, it's a lot riskier this time around, so be mindful of that. All right, we're coming down here to lows. Again, like I said, be careful here if you're going to take the trade. Looking at the 72 area as our next support level. All right, market continues to downtick here. We're looking at the 72 as our next support level that we have. We had 05 as some resistance, but we never got back up there. again, we've had a pretty good morning here. So if we had a little rough start, but once we got going, and we did all right on our other levels as well, and then now we're just kind of hanging here and waiting for opportunities. I mean, I wouldn't, if you made some money this morning and you're happy with the amount, just kind of just take it. And again, we focus on the morning hours here anyway. The afternoon trade gets a little bit more stickier. The volatility is a little weirder. The opportunities are a little bit different. The dynamics of the market are different than what happens in the first couple hours of the day. So you have to be a little bit careful of that. Obviously, our levels are good, but the resistance on the upside is going to change based on different price action opportunities that are going to occur. They're going to occur, and there's definitely lighter volume during the late afternoon or the late morning, early afternoon trade. So dynamics definitely change as the day goes on. So we focus more on the morning hours to give us our opportunities. Like I said, we average 4 to 5 trades a day. I think we easily got that today. We're well beyond that. So we have those days when the market doesn't really do much and we are struggling to get some opportunities. Not today. Patience is very important, more than anything else. Market staying a little bit weak here. Again, we have support down at the 72 area. Anybody have any questions, please feel free to ask in the chat box area as we are coming here towards the end of our morning session. And again, hopefully you got in there at the 73 area for obvious reasons. And a nice rotation there up to 76 here. Hopefully you were able to jump in there. Obviously we're scaling in a little bit differently here. I don't, what is, trying to understand the question. What is 3 times higher than the trading chart mean? What time frame are you talking about? What did I show? Oh well, I'm not scalping off of the 1 hour. If that's what you're asking me, I'm not. I'm using that as a longer term uh, guide for me. In addition to obviously a daily chart, right? So yeah, no, I'm not. I'm going to scalp off of the 5 minute. I'm not going to be again, like I said earlier. We use probably the scalping off of a 3 or 5 minute or 2 minute, whatever those time frames would be a lot. Oh yeah, I mean that's all right. I mean, look, everybody has to use something that they're comfortable using. I don't know if you are comfortable using a 2 or 3 minute or 5 minute or whatever. That's fine. Whatever makes a trader comfortable trading. I got no. I mean, everybody does it their own way. You have to find the one that fits your niche and makes you comfortable trading. I mean, and whatever it is, you know what I'm saying? So, to me, I'm very comfortable using a 5 minute. We don't overtrade. I try to stay away from overtrading, like I said. Hopefully, you were able to jump in there against the 72 area. Obviously, you're not scaling in. Half a point above or below. You're definitely doing a point to maybe even 2 points above and below the level. Hopefully, you got the 73 area or even 74 against our 72, and you had a nice little rotation here. So we've had nice rotation. We got run over on the 23 earlier on, but after that, we've been doing pretty good. If you look at our levels, if you had the levels that we gave out this morning, and now we've come down here to the 72 and tested that. There they are. Again, really the only real bad support level they had, we got to run over there on 23. And then otherwise, the rest of them have done pretty good for us. I think everybody's been doing okay this morning. And once we got past that, and again, we're coming here to the morning hours. Market is definitely weak. Hasn't really corrected. I mean, since almost broke 60 points here, pretty much on more than that since the opening. Tough to get in. We are getting, well, not really. I mean, there's been some big rotations. If you're trading off of the hourly, you really never got exited, but there have been some big rotations off of that. Depending, again, everybody here has different risk tolerances. How you're going to, what your risk tolerances are depends on each individual. So we try to just scalp the market off of the levels that we just gave out. In addition to price action opportunities, we have resistance around the 05 area that's still there right now. I don't know if it's going to get there, but that could change also. And but for the time being, the market just is definitely weak, again, for all the reasons that we talked about earlier. Let me see if I can get you some levels here below. The next level we have on the downside is down at 65. Let me give you a couple other levels here below if we really continue to fall out of bed here. Below 65, we've got 56, 48, 40, and then down to 24. So below 65, we got 56, 48, 40, and then down to 24 in case we really fall out of bed here. Don't know what's going to happen. All we can do is trade the ebbs and flows of the market. Hopefully we get some ebbs and flows, which I think we have been doing okay today. Again, scaling in is very important based on the way the markets are trading. Obviously, we're not going to be perfect, especially in this market. So hopefully you're able to scale in accordingly. We've been trying to suggest where and how and when, and adjust a little bit based on the price action. Hopefully you've got those opportunities. Again, if anybody has any questions, feel free to ask in the chat box. Resistance right now would be around the even area. Anything above, we get above and hold above 05, you want to get out of any shorts. So resistance at 04 to 5, but if we hold above 05, you definitely don't want to be short. So resistance would be anywhere up to even, up to 05, and then if we get above 05, you probably don't want to be short anymore and hold above 05. All right, so we've had some nice opportunities this morning. Again, we are probably up at, I don't know, maybe 10 trades today, maybe more. So been definitely a busy day. Thought we were going to be busy on Friday. Yeah, like I said, always those unemployment days are always kind of weird. You never know how they're going to play out, and they kind of waited a day before doing what I thought they were going to do on Friday, right? But because it was a terrible number, it just takes them a day to react sometimes. I don't know. Who knows? Doesn't really matter as long as we've had our opportunities to make money this morning. That's something I care about. All right, we got resistance at anywhere even to 02, anything above, if we get above 05 and hold, then we are change our direction here maybe for a little bit. All right, so we'll see what happens here. Be a little bit careful. Support level on the downside would be at 72. The next support level that we have. Well, we actually got that already got triggered. We got down to 275, so that's not going to. Or 65, I should say, is the next support level that we have. And upside, like I said, resistance around even to 03, and anything above 05. If we hold above 05, you want to be out of any shorts. And maybe we're consolidating here a little bit. So things have slowed down just a bit in the last, I don't know, 30 minutes, even though we got a big range, and we got filled on one of our other levels, but it seems to have they've slowed down just a tad. Maybe a little range bound here. I don't know. We'll take a little bit of a break now, and we'll get back in a bit and see what happens. But be mindful. Gave you some levels on the downside and also upside where I think there's some resistance. Anything above and hold above 05, you want to be out of any uh, shorts. I get back here in a bit.
Hey, a couple quick shout outs and programming notes. If you haven't signed up for Sol Services, take the moment to do it now. If you need the discount link, let me know and I'll send it out to you privately. Just raise your hand. Victor, let me know. Lynn, let me know. Isaac, let me know. I'll be in the background if you need me. For those that are looking to invite friends in or coming into our service, tradealonglive.com. Tradealonglive.com. That's the direct link to register for this Zoom Trade Along with Sol on a daily basis as a guest. And then we ask you to transition into a paid member pretty quickly. Thank you very much.